Good morning, everybody. Hey, hope you're doing well today. Welcome to the continued roller coaster. Great day yesterday. Not looking real good today. Dave and I will have that discussion here in just a few moments. Again, I want to thank you for joining us. If you like what we're doing here, please like our page and share this video with your friends and family. We'd really appreciate it. We are excited about what we're doing here and really appreciate your continued support. Dave will be with us in just a few moments.
Hey, Gaga there. Good morning. It's 8:41. Nope, not that one. That one there. How's your stock of Dramamine doing? We're about ready to talk money, and it's starting to feel that way on Wall Street. Up yesterday, that ought to tell you what today's going to do. Here's Phillip Statler from the offices of Statler Financial Services to explain why. Phillip, good morning. How are you?
Good morning, Dave. Not sure how much explaining we're doing, but I'm feeling like, I'm going to be on a boat in a couple of weeks, and I'm feeling like I'm already getting a little bit of precursor to what that's going to be like.
Oh, Lordy. I mean, Dramamine is not a bad thing to look at lately. Yesterday, the Dow was up 372 points. NASDAQ was up almost 2%, up 153. Standard & Poor's up 1.5%, up almost 43. Happy days are here again. All of a sudden, we're recovering. Can 28,000 Dow be that far away? And then the bond yields inverted overnight, and we fell like the proverbial rock, didn't we?
We did. I was thinking, hey, maybe after yesterday we were on the mend and we were going to have a great rest of the week, because last night when I went to bed, the futures didn't look too bad. Actually, when I got up this morning, the futures weren't bad at all. And then all of a sudden, I look at my screen again, and they just have made a disastrous turn to the south. And,
absolutely.
And I think it's more than just a bond yield. I mean, we'll talk about Germany here in a minute, but they're not helping anything either.
Yeah, we got a boatload of data, and absolutely none of it is showing up good. Start out with the bond yields, because that was really the earth mover for the bunch. Traditional economists say that after you see a substantial inversion of interest rates, meaning the yield for a short-term bond is better than the yield for a long-term bond, eventually you're going to get in trouble, and a recession is not far away. The 10-year Treasury notes right now from the U.S. government are yielding, I'm getting 1.61%. The number that folks watch a lot is the 2-year number, but I'm comparing it to the 3-month bill, and a 3-month Treasury bill is yielding 1.93. 10-year money is only yielding 1.6, and the 2 actually looks worse than that when you start comparing it.
Well, it does. And look at the 30-year bond rate. It's just a tad over 2%. It's just crazy what these interest rates are doing right now. And Arian, the big bond guru, he said it's not out of question that we could see negative bond rates here in the U.S., which I don't think we've ever seen, Dave.
I saw that headline cross, and I was thinking that was just one of those pundits that go out on a limb saying something's going to happen and then say, see, I was right when it happened. But this guy actually has some credibility.
Oh, yeah. Alarian, him and Bill Gross ran one of the largest bond funds in the country. And they parted ways, and he started doing some other stuff. But he's the bond guy when it comes to that type of stuff. And so we look at him and take what he say pretty seriously when we talk about that. We didn't talk about this before we went on the air, but the import prices came in too. I don't know if you saw that or not.
I know that, and I was going to say July's import prices were up 0.2%, but I also noticed that annualized, for all of the tariff rattling we've been doing, import prices annualized were down 1.8%.
Yeah, and I thought that was pretty good too. And actually, if you look at July, if you take out fuel, import prices were down 0.1%.
I didn't see that variance on it. In other words, the tariffs really aren't raising the prices all that much.
No, it seems to be fuel seems to be an issue right now, which, the price of oil has been fluctuating quite a bit and has gotten up relatively high in July compared to what it had been earlier in the year. So I guess the fuel prices could have caused that big of a difference.
Yeah, that import price number really does. It kind of gives a little bit of credibility to something I went out on a limb on a few months ago and said, don't expect a 10% tariff to automatically mean a 10% increase, because the Chinese still want to do business with us. And those manufacturers are evidently, they are eating a lot of the tariff cost just to be able to stay competitive with the other Asian Rim nations that were not tariffing.
Well, that's true. The other thing I saw was that, supposedly September 1st was, hey, we're going to start putting this 10% tariff on all these other things. Well, now they've backed off on that list. Now, that doesn't mean that some of them are going to get, but evidently things related to the holiday season are not going to get the tariff put on there yet.
I mean, all those cheap plastic Christmas trees aren't going to get tariffed, huh?
That must be what they're talking about. That and decorations and lights, and because a boatload of that stuff comes from China.
Evidently, and I think that was the reason for the big party time yesterday, because it was yesterday during the day that they announced that they were going to hold off and be nice guys on that tariff increase, and all three of the major indexes just had an absolute party time off of it. Just as an aside on import prices, I also noticed that annually Chinese import prices into this country off 1.6% from 12 months ago. So it's not like the tariffs are costing us more money on the street, are they?
It sure doesn't seem that way yet, but everybody always has been cautioning us that, hey, we are not feeling the full brunt of the tariffs yet. That takes several quarters down the road before that really starts to kick in.
And that's fair as well, a very fair statement. The other element of economic news to hit, and this one was kind of like a truck running over something. Germany reported their gross domestic product this morning, and their quarterly gross domestic product number went down by 0.1%. You do that a couple of months in a row, and you've got what all the economists call a recession, and that's a four-letter word.
You're exactly right, Dave. And so I think that on top of the interest rates is definitely putting pressure on our markets today because let's face it, Germany is still a fairly good economy or good size economy. And you take that and compare to the rest of the Euro nations, they're not in the same boat yet. And so
they're pretty much the economic engine of the European economic community, and they go down, the entire European community starts getting hit in the schlorts.
You're right, they really do. And so if we come to August and we get the same number hitting down, or the next quarter the number goes down again, then they're in a technical recession. And I can only imagine what that's going to do to the world economic markets.
Even if 0.1% doesn't make that big a difference in the context of the whole world in terms of real measurable money, the morale impact it'll have on markets worldwide will be really, really telling.
Well, it will, and those people that are technical guys, that'll play a part in how they manage their portfolios.
Absolutely, without a doubt. We just have no merry sunshine to blow at people today talking about earnings season reports. We start out with just a real flop with Macy's report that came out, right?
We do, man. I'm telling you, Macy's was a huge, huge miss today. They came in and they had earnings of 28 cents a share. The street expected them to come in at 70 cents a share. Can you say big miss? That's a big miss. Now, revenue was off just slightly. What wasn't a big deal when it comes to revenue, and they kind of reconfirmed their same-store sales projections for this year, which isn't a huge deal, but up 1%, I think, is what they're looking for. And so I think they're getting beat up. I'm sure they're one of your big losers today. I think right now they're down about 15%.
Yeah, they're the top of my big loser list this morning. I saw that and I said, oh gosh, I got to go look for the report that caused that, and pretty much confirmed what I saw on my loser list this morning. Boy, you add that with Penny's miss and then Sears store closures. It's not looking like a good quarter for brick and mortar retail. And I noticed on my loser list, half the other big names in brick and mortar retail that didn't even report are losing just on the heels of Macy's this morning.
Oh, I'm sure they are. I'm sure that that's going to drag down the whole retail sector, because if they're going to look at Macy's, if Macy's is struggling, what's it going to do to, Nordstrom's? What's it going to do to all these other department stores, and when they start reporting?
Oh yeah, I've got Nordstrom, I've got Kohl's, I got Target all on my big loser list this morning, and they haven't even reported. It's just Macy's that's drawing them down. You got any good news out of the earnings reports to give us?
I wish I could say I did, Dave, but I don't really. Let's
How
start
about
with a
how
couple.
about
Huh?
how about weed?
Weed, yes, weed, but weed did not do as well as it was supposed to be doing.
You're
Uh,
kidding.
no, we got Telray, one of the big, cannabis companies. They reported a loss of 32 cents a share, which was bigger than expected. They were expected to only lose about 25 cents a share. Revenue did beat forecast, and they have some potential of some new supply deals coming in this next month. But definitely they are not being helped today. They're down almost 11%. And I find this stat kind of interesting. I'm looking at the 52-week range. Get this, Dave. I don't think I've ever seen this big of a range.
Hmm.
From a low of $24 to a high of $300 a share.
That starts looking like a Bitcoin number, doesn't it?
It does. Right now, if they opened right now, they'd be at $41 a share.
you know it's a bad day when you can't even sell grass.
Yeah, exactly. Well, yeah,
Time
the sales are there. It's just that it's probably costing them more to produce than what they thought it was going to cost them.
I got you. Got time for one more before we tie the ribbons on it. What
All
else is
right.
telling?
So another one we have is Mered Genetics. It's a pharmaceutical company. They did come in with 41 cents a share, but they missed by about 6 cents a share. Revenue was below forecast. This one beats all of them. It's down almost 34% this morning.
Boy, gosh, where is Mary Sunshine when we need her? Don't have much today.
Can't find any.
Not much. Resetting the table. It was big up day yesterday. Almost the rhythm of things for the last few weeks would imply it was going to be down, but boy, is it heading down fast. We're 45 minutes early, Phillip. Where are we anyway?
So we bounced off the lows, but we're still down significantly. The Dow right now is down about 1.5%, $387. S&P 500 is down about 1.5%, 42.5. And then we got the NASDAQ down about 1.6%, down 123 points. Gold and silver, gold's up 0.5 point, silver's up 1%. Crude oil is retreating, down almost 3% this morning to $55.47 a barrel.
You can tell when the news came out on the overseas markets, Asia hadn't gotten the news about Germany yet, so they were all up when the Asian rim markets closed early this morning. Europe, on the other hand, is in the middle of a major league sell-off. The German index is down by the better part of 2% halfway through their day today. Phillip, stability, help, advice. How do I make retirement work and get a hold of you on the phone?
To get a financial x-ray analysis of your current portfolio to make sure that you're getting the right coaching for retirement, give me a call at 382-0037. Then on the other side, retirement is a kind of a one and done. And if you think you're going to get your income from the stock market, you need to text and get this report on retirement strategies. Text retirement to 863-285-3815, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. on Sunday mornings.
All righty. We'll listen for that as well. Phillip, thank you so much. We'll catch you shortly, all right?
All right. Thanks, Bay. Have a great one.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, don't forget our free report on retirement strategies. Again, if you think your income is going to come out of the stock market, you need to get this report to make sure you've got things in the right strategic way for retirement. Text retirement to 863-285-3815. Again, thanks for joining us. I look forward to speaking to you again tomorrow morning.